So I mean, one of the things that's happened in our economy over the last 35 to 40 years is, not just our economy, the entire political discourse, is that there's been this attack on government, right? Government's a problem, not the solution. We need to drown government in a bathtub. As this has happened, we've had, it's had real consequences for taxes. Corporate tax rates have gone down, drastically over the last 35, 40 years. Same has happened with the taxes for the top income brackets for individual income taxes. As that's happened, cities and states still have to, needs have actually kept growing. And so in order to actually make ends meet, they've had to borrow a record level of money. Of course, a lot of that is actually perfectly necessary, but in a lot of cases you have cities that are forced to borrow to make ends meet for short-term things that they used to be able to pay for. As this has happened, banks have fundamentally really swooped in and taken advantage. The same way that cash-strapped homeowners and families have basically been forced to replace debt with income, or rather replace income with debt. As the rates haven't kept up, we've started taking on more and more debt. Well, banks swooped in and basically started targeting cash-strapped homeowners with predatory loans that had hidden risks, hidden costs that were designed to fail ultimately. Well, the same things actually happened with cities and states. So while you talked about this earlier with the interest rate swap and the swap and COP transaction set up for Detroit. Another example that came to mind earlier when the brother from Absalom was speaking was in Puerto Rico, where they just recently had a credit rating downgrade that triggered a whole bunch of termination payments, accelerated payments, and swaps and other things. Basically, very quickly, Puerto Rico had $1 billion at exactly the time they would have had a very tough time raising money in the markets because they'd taken a hit on its credit rating, which is like a credit score. If you have a low credit score, it's hard to get good interest rates for good loans. And so the solution was there's a group of hedge funds that swooped in and said, we'll lend you the money, we're going to charge you, I believe it was 10% interest, which is really high for cities and states, or in the case of Puerto Rico colonies. We're going to put a lien on a lot of public assets. They're also, as part of that, there's a clause in the bond covenants that says that the investors will get to decide which courts any legal challenges are heard in, which is again interesting in the case of Puerto Rico in particular because it's this colonial situation where it's and what this actually does is just the hedge funds or whoever the hedge funds sell the debt to basically take any legal challenge that arise out of the Puerto Rican courts and move to the New York courts where they'll get friendly ground. And so really what me and a group of people we've been working with have started saying is that this is actually no different from predatory lending. This is predatory municipal lending.
Yeah, right.
And what we need to start doing is really thinking about how we can fight that back. Because the fact is that this actually has a big impact on our budget. So there's a report that came out in LA a couple of weeks ago that showed that the city of Los Angeles paid $205 million in fees, just bank fees last year. 1 year alone, $205 million in fees. That's more than the city's entire street services budget. And the fact is that municipal finance is a zero-sum game. Any money that's going to Wall Street is money that's not going to the public services. And so that's what the cost is. And so there's really, the cities need to take a three-pronged approach to actually beating this back and fundamentally renegotiating the relationship with Wall Street. So we're starting to call, me and people I've been working with, we're calling this reclaim, reduce, recoup. So with reclaim, the idea is any business we're doing with Wall Street, their main goal is to figure out how they can get their pound of flesh. So we need to reclaim as much of the business as we can for ourselves. And so what that means is we need to come up with public options, things like creating public banks. So there's the state-owned bank in North Dakota that already exists. There are ideas people are talking about. Could we have either more state-owned banks or banks that are owned by cities? There's a proposal that's currently out there, which doesn't necessarily work that much in this. There's a car waiting for me, so I have to keep this short. There's a proposal that was advanced by the Postal Service around bringing back postal banking. So what are the ideas to actually have public options in banking? Another idea along these lines is what are things that can be insourced? So for instance, a lot of money is spent by cities and pension funds in particular on investment management Well, could you bring some of that in-house managers to, again, take Wall Street out of the picture? Some of the other ideas, the Federal Reserve, when the banks were on the verge of failure, the Federal Reserve stepped in and bought all of their toxic assets, which is the bad loans that they have on their books. Well, why can't the Federal Reserve actually buy municipal debt? And there's a reason why it can't, which is that there's policies, but what can we do to actually change the policies to actually allow the Federal Reserve to directly buy municipal debt to actually give cities and states access to the same affordable financing that banks can get currently, and that is available to others. Another example of this would be to actually have, there are other services like credit enhancements, which are types of bond insurance that states can actually provide for school districts, small municipalities, and some states like Washington State already do that. And so again, what are things that either we can set up public entities like public banks or create public options. To reduce the ideas, how do we fundamentally band together? How do cities come together to start borrowing more fundamental fees, right? So there are fee structures that are considered sacrosanct, they're decided by the market. Well, the market is an artificial construct. It's not something automatically exists. We as cities come together to fight for lower fees, but we bargain for it. Recoup is basically where there's been wrongdoing, fraud, actually sue to get the money back, and claw back anyone doesn't owe that. And so that's what some ideas move forward, and I better run.